Ask the questions. Okay, also, guys, the way that this, I'll cover breaker blocks first. But the way that this is going to work, also, is anyone recording this before? Okay, bet. Okay. All right, as long as people are recording, I'm getting the session. Okay, great. So I'm going to cover breakers first. But the way that we're going to do this, because last time there was a lot of missed questions, because like as I'm explaining something, I don't see the chat. So like wait for me to finish explaining what I'm explaining to answer questions, because obviously when I'm explaining something, I'm just looking at the chart. I'm not looking at the chat. All right. So yeah. So the first thing I'm going to cover is breaker blocks. Breaker blocks. Okay. Everybody lock the fuck in. Okay. So our breaker block from this morning. Was right here. Actually, I want to cover the breaker block from yesterday because that shit had a crazy reaction. And I feel like that one would be the better one to cover. Yesterday was Thursday, right? Wait, guys, when was that break? Oh, that breaker block trade was Wednesday. Okay, the one I got stopped out of and went and ran. Okay, so breaker blocks, right? I think this would be. Am I tripping? Where the fuck was the breaker block? Let me look at my screenshot that I took. Blah. Okay, this was like between 9 and 12 on 9 and 12 on Thursday. Wednesday. Wait, no, this was between 9 and 12 on Wednesday. Okay, right here. All right, this was the breaker block. Okay, so a breaker block is essentially a failed order block that price reacts very strongly to. Okay, so first I'm gonna like explain it here and then I'll show you with the chart. So, all right, you know how an order block, right? In order for an order block to be put in, it's like we're in a bearish trend. Okay, maybe we have a fair value gap, and then we have an up close candle, right? And then we have an up close candle that pulls into the fair value gap, right? And then we have a continuation out of that fair value gap to the downside, okay? And that is an order block that price taps into, right? We all know what an order block is, right? This is the order block, right? Okay? This candle is the candle that confirmed the order block, and then this candle taps into the order block and then trades to the downside, right? So like, for example, if 10 a.m. was about to open up, right, there's an order block, price would open, manipulate into that order block, and then trade to the downside, right? But a breaker block is when instead of this candle or any candle, instead of this candle pulling into that order block and trading to the downside, instead of doing that, and then we continue, we can have a candle that goes ahead and breaks above this order block, turning this candle into a wonderful breaker block. Now this candle is a breaker block. And what does price do? Instead of price using the order block down here to continue to the downside, price taps into the breaker block and continues to the upside. You see? See what I mean? So like the order block, here, and now let me show you on the chart, okay? So this was the order block, right? This right here pulled into this fair value gap, created this order block, okay, with the body, okay? All right, what happens? Okay, we don't tap into the order block, but then we do is we close above the order block, right? Let me go back one. We close above the order block, turning this into a breaker block from the top wick to the bottom wick. And that's the breaker block. And then we see price trade into this breaker block for the 1 minute. Okay. Okay, we see price trade into the breaker block. And then we want this change in state out of that breaker block to go long. Oh, this is the change in state. We close there. This was my exact trade. Got an entry there. I set my stop at this fucking low like an idiot. I set my stop at this low when I should have set it at the protected low down here. What happened? My stop got ran, and we immediately started trading to the upside. See, we eventually took the data high. We go here. Eventually took the data high, and that was the trade. So as you can see, breaker blocks are pretty powerful, and that's how they work. Yeah, basically, yes, a failed order block, essentially. Okay? A breaker block is a failed order block. Okay, it's an order block. So you know how a let me go to the 15-minute. Where is my drawings? Okay, so you know how an order block is confirmed when this down close candle closes below this up close candle that pulled into the fair value gap, right? Just like in a change in state of delivery, a change in state of delivery is confirmed with this candle closure that closed above the candle sweeping the lows, right? An order block, a breaker block is confirmed when the candle closes above the order block, and then that's breaker block. Okay, so do you guys understand? Do you guys understand what a breaker block is now? No, Hamoudi, the order block is the body. Okay, so the order block. Some people use the wick, but I use the body. Okay, so that's the order block right there. Okay. A unicorn is when there's a breaker block inside of a fair value gap. So this was actually a unicorn because we have this fair value gap right here. Price never pulled in. Actually, no, this is not a unicorn. A unicorn would be something like on the hourly today. An hourly today. Wait, where is it? This morning. Where's this morning? Okay, so this morning we had this order block right here. All right, why is this an order block? Because it pulled into this fair value gap down here, right? Confirming it as an order block. Okay, so we had this order block right here, and we had this fair value gap. So this was a very high probability. You know, price never ended up pulling into this, but that's a very high probability long right there. Why do I not use the wick? I don't know. I didn't learn it that way. I learned it without the wick. Is there any specific reason why we use wicks on breaker blocks and not order blocks? No, I don't know. I was just taught that way. Some people do breaker blocks like this. Like, let's pretend this is a breaker block. It's not, but like, let's pretend it was. Some people do this, like in a bullish scenario, they'll use this as the breaker block. And in a bearish scenario, they'll use this as the breaker block. I don't do that. I just do the whole thing. It's just easier. No, I don't recommend trading Monday no news. Why would I recommend trading Monday no news? A mitigated PD array is like, dude, what is this? A multiple choice test? Like what? Yo, guys, one question at a time. I don't even know what I'm looking at for. What I'm looking for. Okay, an order block. Let me describe. Right. Okay. See this fair value gap right here. Okay, let's see price creates this fair value gap. All right. And then let's say that we continue up. Okay. Let's say we pull into this and then use that to expand higher. This down close candle. This down close candle would be considered an order block when this candle closes. Okay, so once this candle closes, this gets confirmed as an order block. Okay, it's not an order block until this candle closes above it. Okay, it could be that. It could be this, right? Let's say we continue trading to the upside, right? And then we trade to the downside into that and then use it to go higher, right? Like all of these down close candles. These are all down close candles. And guess what? Okay, right here. Guys, would that be considered an order block? Would that be considered an order block right there? Yeah, I'm seeing a lot of no's and yeses. Okay, to all the people saying yes, why would that be an order block? Why would that be an order block? Yeah, it's not an order block until a candle closes above it, making it an order block. Now it's an order block to pull into and go higher. Right? That's how that works. Okay? Why is this not an order block? Why is this candle right here? Why is this not an order block? Why is it not an order block? Exactly. No fair value gap. It didn't sweep any, it didn't get liquidity. Okay? Didn't pull into any PD array. It's not an order block. All right, so all of these candles are one order block. This could be one candle, this could be many candles. But if we don't sweep into a PD array, then it's not an order block. It's also not an order block. Wait, I don't want to start with that. I want to start with this, right? What is this also? Right, I want you guys to notice something. This is also, what is it? Let's pretend this is on the 1 minute time frame. Let's pretend we're on the 1 minute time frame, right? This is a change in state of delivery, right? It is a change in state, right? On the lower time frame. Okay? So, what does that tell us about change in state of delivery and order blocks? No propulsion block bullshit. What the fuck is, I don't even know what a propulsion block is. Yeah, so a change in state of delivery and an order block are very similar. But the difference between a change in state of delivery and an order block is that a change in state of delivery like changes the direction of price, while an order block is a continuation. So an order block is a higher time frame continuation that we use as a higher time frame PD array. A change in state of delivery is a lower time frame confluence that we use for a reversal out of a higher time frame PD array. You get what I'm saying? It's a big difference. Yo, Kaiser, if you send that message one more time, I'm going to block you from all my socials and I'm going to kick you from the Discord. And you're never going to be able to join anything I ever make again because I'm going to get your IP and I'm going to track down your house and I'm going to break all your computers. Yeah, so an order block is a higher time frame confluence and a change in state of delivery is a lower time frame. Or, I mean, an order block is a higher time frame PD array. Change in state of delivery is a lower time frame confluence, right? So like, you can support me just by following me, man. Morphing into TJR. No, TBK, what are you saying? No, guys, don't call me TJR. No, it's not wrong to mark the order blocks with the wicks in it. Some people do that. I just don't do it. So, okay, I want to explain SMT because SMT is like really fucking important and a lot of people argue about it, which is so stupid. Okay? I'm going to explain SMT. All right? So, if we're here, let's say we are, okay, we're on the 1 hour. Okay, where can I, what's like a good spot to, okay, I'm not going to look because it's going to take me too long. But, for example, okay, let's say we have an SMT, 15-minute SMT, all right, bullish SMT. Okay, if we have that 15-minute SMT, that can be our SMT confluence on the lower time frame. So I could still take that 1 minute execution without the SMT on the 1 minute because we already have SMT externally on the 15-minute. You get me? Like if there's no SMT on any time frame, there's no trade. But if there's SMT on a 15-minute time frame and you're taking a 1 minute execution and there's no SMT on the 1 minute internal time frame, but there's SMT on like the swing lows of the 15-minute or the swing highs, but there's no SMT inside the actual PD array you're using for an execution, you could still account for that SMT and take that trade, right? You're still allowed to take that trade. Yeah, same for 1 hour and 5 minute. I don't use kill zones in daily profiles, no. If there's SMT both ways, that happens sometimes, then I'll just disregard SMT and I'll still take the setup if it's there. The CE is just the midpoint of a PD array or a wick. So like for example, let me find like a big wick. Okay, the trade today that I got stopped to break even, right? On the weekly time frame, this was my take profit. My take profit was the CE of this wick, this weekly wick. Okay, so let me get rectangle. Okay, this is a weekly CE. Okay, so these big wicks can act as PD arrays. So like the CE of a wick is very powerful, just like a bullish fair value gap is respected if the CE of that fair value gap is respected. So like right here, okay, we never retested this, but like if we did and we went ahead and tapped into the CE and had a hard rejection, I would be very confident in this trade because we respected the CE of that fair value gap. So like the CE is just the midpoint of a PD array or a large wick. Okay, Ace. You said, how do you recognize what weekly profile is going to be in real time? Like in midweek, like this week, it became midweek reversal bullish. No, this week's weekly profile was a Wednesday low of week. And if you scroll to my big chart analysis channel, you'll see my analysis and why and how I went into the weekly profile. So, for example, let me cover this. Okay, this week I was bullish. I was bullish this week. replay here. Okay. So I was bullish this week because we tapped into was it a weekly? It was a weekly fair value gap right here. Okay. We tapped into this weekly fair value gap and we respected it. I mean, look at this candle. We respected it. Okay. So now that we tapped into that fair value gap, I'm bullish this week. Also, we keep on making new highs. Like this past week made a new high from this week. 2 weeks ago. I mean, this past week made a new high from 2 weeks ago, right? So, guys, what's a bullish candlestick? What's a bullish candlestick, guys? Okay, open, low, high, close, right? So, in order for the weekly candle to be open, low, high, close, what does that look like? Right? Like on the daily time frame, like what does that look like? Okay, wick down, then body up, right? So like, if I drop down to the daily time frame, okay, I know there are 3 types of bearish weekly profiles, right? There is a classic buy week. There is a Tuesday low of week, and then there is a Wednesday low of week, right? So a classic buy week is a down close candle on Monday. So immediately we open up, make a low, down close candle on Monday. Tuesday, Wednesday, Thursday, up close candles, and then Friday, down close candle. Okay, that's a classic buy week. All right, a Tuesday low of week is a Monday open, Tuesday low of week, Wednesday, Thursday, Friday close. Okay, a Wednesday low of week is Monday open, Tuesday range, Wednesday low, Thursday, Friday close. Right? So these are the 3 types of bullish weekly profiles. Okay? So with that being said, right? Look, last week was a classic buy week. As you see, Monday made the low week, Tuesday, Wednesday, Thursday, Friday close. Okay? This week, I knew it was a bullish weekly profile, but I didn't know which weekly profile it was going to be. But I know that if Monday we make a low and Tuesday we don't even come close to that low and we keep trading, then I know that it's probably a classic buy week. If Monday we open, maybe it's an up close candle, maybe it's a down close candle. Tuesday comes around and maybe there's high volatility news, there's red folder news. Maybe Tuesday we make a low, then I'd wait to see, right? Like if Tuesday we make a low, I'm still bullish Wednesday, Thursday, Friday, right? And if on Wednesday I get stopped out and we make a new low again, then I know I'm bullish on Thursday and Friday because it's either Tuesday or Wednesday low of week, right? So like, let's see. This was a green up close candle, right? This next weekly candle is an up close candle. So on Monday, we open. Why isn't this playing? Oh my God. Let me go here. Okay, so on Monday, let me replay. Okay, so on Monday, is this Monday? Yeah. We open, we don't do anything. There's like nothing, we do nothing on Monday. Okay? So when there's a candle like this, we didn't even break this candle's low, right? We didn't even pull into this like mini fair value gap here. So I know that either Tuesday or Wednesday, it's either going to be a Tuesday or Wednesday low of week, right? So like on Tuesday, we make a new high. We still haven't traded lower, and I'm still bullish on the week. Okay, so we haven't traded into this fair value gap. We haven't traded into anything. Since I'm still bullish on the week, I still think there's going to be a weekly candlestick. I know we have to break this low on Wednesday because it wasn't a classic buy week. It wasn't a Tuesday low of week. So it has to be a Wednesday low of week, right? So on Wednesday, we go ahead and make that low, right? And then Thursday, obviously, was an up close candle. We made a new high, and Friday made a new high. So that's how you tell the weekly PO3. It would be the reverse in a bearish scenario. You get me? nothing would have invalidated longs for me on Wednesday. So on Wednesday, right? Let me go to Wednesday. Let me go to Wednesday at like 9 a.m. Where's Wednesday? Okay, Wednesday's right here. Okay, Wednesday at 9:45. All right, this is Wednesday at 9:45. Okay. Okay. So Wednesday at 9:45, we have we've wiped out a lot, right? Wednesday we swept this low. Again, it is important to remember here that even though we had all of this bearish order flow, my higher time frame narrative was bullish. So I still believed that this was a Wednesday low of week, right? So since it's a Wednesday low of week, I don't care about all of this stuff, right? We swept this low. I'm confident that this is a Wednesday low of week, and if I get stopped out, I get stopped out. Boo-hoo, I was wrong about the weekly VO3, right? And if it ends up not being a Wednesday low of week, and we just never trade to the upside, then I know that it's a classic sell week, right? So, or Tuesday high of week, you know? So, whatever. Wednesday came along, and 10 a.m. opened up, traded lower. Okay, immediately at 10 a.m. open, we immediately invalidated. I remember this actually. I was bearish. If you look back to my analysis, I was bearish. And I even said in my big chart analysis, I said, since we're invalidating all of these 15-minute PD rays, I'm switching my bias to bullish. Do you guys remember that on Wednesday? Yeah. So this right here invalidated my bullish bias. And the next thing I was looking for was this 15-minute order block. And what happens, as we all know, we close right through it, making it a breaker block. And I will say it again, right? It was a breaker. That's been established. So drop to the 1 minute for an execution. What happened? I take this change in state right here on this candle closure, and I set my stop to this low right here. And then I get stopped out. And my final TP are these data highs right here. And I got stopped out, which was so annoying because price went ahead and took those data highs eventually. Let's see. Eventually. Yep, right there. Took those data highs. So I got stopped out of like a 300-point trade, which is sad. But that's exactly how I went into breaker. Exactly how I went into it. Yes, unknown G-Man recording. Don't worry. Bum bum bum. Big chart, what attracted you towards the PO3 model, considering you have other successful friends who trade different models? This one's just really simple for me. Like if the trade's not there, I don't take it. If it's there, I take it. It's really simple, and I just think it makes the most sense to me. So I'm not gonna like trade something like Powell's model where I don't really understand it. I'm not gonna take the time to like learn it when I already took the time to learn this, and you know, I just love trading this. Simple. Because this is like this 4-hour PO3, like even if you have a 50% win rate, even if you have a 50% win rate, like you're still profitable because of the like the 2R and like everything that goes into it. Your losing trades are way smaller than your winning trades. Guys, I already went over breaker blocks at the beginning. This is recorded, so once I post this to YouTube, you can see it. Sheldon, let me see your question. To have a valid trader, you're looking for an immediate reaction on a Peter and then blah 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 blah. No, I don't have a time cutoff. That's a big ass question, bro. I don't have a time cutoff. No. Can you explain your way to manage trades? Do you trail every time price makes a new swing point, or can you leave break even or two? Okay, I'm gonna go over today's trade because that's exactly how I got fucked, and it's so annoying. So, okay, yeah, TBK. Remember that question? I'm gonna go over it after I go over today, after I go over this trade. All right. So let me look at today's trade. Where was today? Today was another breaker block. Right here. Okay, where was that breaker block? Right here. Right, guys, you see how it's a breaker block? It's a breaker block because it was an order block. It was an order block. This candle confirmed the order block. And we broke above it. Okay, breaker. So, right here, dropped down to the 1 minute. I had my execution. Right? Change in state of delivery was all the way. This was my change in state level. Oh, wait, no, it wasn't. This was my change in state level. Was it? I don't even know. Yeah, it had to be. No, because that's that change in state level. Where was it? Could have been, oh, it was here. This was the change in state level. Yes, yes, yes. Okay, so like I said, right, took this trade. My entry was on the candle that changed the state of delivery, so my entry was right. Okay, I gotta turn the magnet off. Okay, so my entry was right here. My stop went at this low. And then my TP was at the CE of this weekly wick. So where is this? Why do the candles just not show up? I love when that happens. Okay, that makes a lot of sense. Okay, so the weekly CE. Again, guys, you remember what a CE is, the 50% of a wick, so there, 50%. All right, so that was my final TP. So here is what happened. I was in drawdown, essentially this whole trade. I'm fine with it because the trade would have eventually stopped me out, break even, right? Like regardless. Because, so here's what happened, right? I went long right here. This is to show you guys how I manage my trades. And I'm probably going to change this because I'm really annoyed with it recently. So my stop loss always goes at the protected low. And I used to never move my stop. I used to never move my stop, but recently I've been moving it and it's been like fucking me every time if you guys have been looking at my social media. So, all right, we're basically doing nothing. And then I was like, okay, you know what? I'm going to move my stop to break even once we break this high. And so we broke the high and I moved my stop to break even, which is right here. And then I got stopped out. But if I never moved my stop, you see, I should have moved my stop to break even once we pulled into this daily fair value gap right here. Like initially that was the plan, right? I was like, okay, I'm not going to move my stop to break even until we pull into this daily fair value gap. And so I moved it to break even when we broke this high instead because I was like, oh, let me protect my capital. Went ahead and took it. And then, well, it doesn't matter regardless because it got stopped and break even over here. But that was the trade. Usually I'll just keep it at the protected low. And then I'll move it up when we hit like TP1. Another thing you can do is like, let's say I'm in this long, right? Right? Let's say my stop was here originally. Okay, no, let's say my stop was at this low. What I would do is like, okay, new high, right? We shouldn't break below this high, right? Okay, blah, blah, blah. We shouldn't break below this low, right? Okay, trade it to the upside. Shouldn't break below this low. Stop would go there. And stop would go here. And then stop would go here, right? Like that's how I would manage it. I don't normally trail my stop unless it's like a huge range, but that's how I manage my trades. What is that? What is that thing? Yo, Kaiser. Why didn't you take a long from the fair value gap at 9:45? I wait for 10 a.m. to open up. That's the only time I take this trade. I don't trade before 10 a.m. ever. Ever, ever, ever. Yo, what are you asking me? No, no, Vaso, this is not valid. I mean, change in state of delivery. It's the only valid change in state. No, I don't think. I think there's way too much money for trading to be saturated ever. No, Sledge. I'm not profitable yet. The higher time frames always have more significance, but it really depends on like how price is moving. If like my higher time frame bias is bullish and it's a bullish hourly and it's a bullish 15-minute, I'll use a 15-minute so I can take less risk on with a 1-minute execution. Guys, for psychology stuff, I wanted to talk about this for TBK's sake. Okay. For psychology. Like, if you're over trading, okay, let's say like you keep blowing accounts, like you can't get funded, you keep blowing accounts, blah, 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 blah. Okay. If I sat there and asked you to like tell me every single trade you took and like the confluences that aligned for that trade, like 100% of the time, you are taking trades you're not supposed to be taking. So like if you just stop taking trades you're not supposed to be taking, then your psychology is fixed and you have no more problems. Like it really is just like a decision. You know? Like that's everything that's all that goes into it. That's why I was like in announcements I was like, yo, in May we're going hard, right? No more fucking up, because like, dude, it gets to a point where you're just like, holy shit, keep making the same mistakes, taking trades with no confluences. Like, I'm out of here. I'm stopping this shit. It's destroying me. Big chart, when you switch time frames and can't see price, don't scroll in or I'll just double click the price on the right and move to your chart. Right. Thank you, Franco. No, if I won that 10 a.m. trade, it depends. If 2 p.m. is really good, yes. Like I would look. So like here's what I do. If I take one win on the day, then I can take another trade. Okay. If I take one loss on the day, I could take another trade. If I take one win and one loss on the day, I could take one more trade, regardless of the outcome. You got it? Because since we're taking 1 to 2R, if I take one win and one loss, right, that means that my win was 2R and my loss, right, I lost my full risk, right? So like if every single trade I'm risking $500, that first trade I won $1,000, right, in that trade. And then the first loss, well, I lost $500. Okay, so I'm still up $500 on the day. I'm still up 1R. So then I can give myself space to take another trade for the day, right, since I took one win and one loss. If I took one win, that means I'm up 2R on the day. I could take one more trade. If it's a win, then I'm up 4R. If it's a loss, then I'm up 1R. I'm still up on the day. If I took a loss, then I'm down 2R on the day. I'm down 1R on the day, right? So if that second trade's a win, then I'm up 1R. If the second trade's a loss, you know, it's a bad day trading. Sledge, I think you should not quit. Don't quit your 9 to 5 until like you actually have proven yourself as a trader. You know? Yeah, it's my roommate was cooking. Roommate was cooking steak, so now all this shit is going off. I don't know when it's gonna end. 2 seconds. Okay, we're good. I'm fine, guys. Could be eating 9 to 5 after the house burns down. Yo, dude, I feel like I answered this question already. If a 15-minute PD array is inside a 1-hour PD array, can you execute on 1 minute or 5-minute execution gives you the higher probability? This is my only question. Dude, it depends on like the bias and everything. If you're bullish and both PD arrays are bullish, then like if price taps into the 15-minute, you can execute on the 1 minute since all the bias is lined up. But like, I don't, you get what I'm saying? Yeah, of course I take more than 2 hour trades sometimes, yes. Guys, so like let me show you, okay? So like let's pretend, okay, this 4-hour candle opens up. Okay? Like let's pretend this candle opens up. Right? Let me go to the 15-minute. Okay, whatever trades I take, like right here, my whole thesis is like, wait, select bar. My whole thesis is like, if I take this trade up here, yeah, I'm going to tell you when I take more than 2R. That's why I'm doing this. So like, let's say I go short here, blah, blah, blah. Okay, wait. Okay, like, all right, whatever. Let's just say I go short here. Okay, this is a terrible example, but like, let's say it's let's say there's like candlesticks here and like the stop is like right here, like let's say there's like a 19-point stop, and then we have these like relative equal lows here, right? Like this is a 8R trade, but like I'll take it because like my thesis is that like this 4-hour candle is gonna turn red, right? So like, you know, like I'll take that 8-hour trade because I'm setting my TP is going to the opposite of that 4-hour candle. You get me? Every single time. All right? Yeah, I'll explain how to combine the draw on the daily time frame and the weekly profile. Okay, so let's go back to this week. Okay, again, it was a bullish week, right? So like on the daily time frame, okay. On Monday, you guys remember like when have you guys ever seen, or maybe, no, I'm not a full-time trader. So like right here, right? for the daily time frame. If price closes above previous day high, target previous day high, right? That's a bullish continuation. Price closes below previous day low, target day low. That's a bearish continuation. Price wicks above previous day high and closes below target previous day low. That's a bearish reversal, right? And then vice versa for the other way around. So like price wicks below previous day low and closes above target previous day high, right? So like right here on the daily time frame, you can see on Monday we wick below previous day high, close below. So this would be my draw, right? Because like I said, price wicks above previous day high and closed below target previous day low. Right? We wicked above previous day high, as you can see. Here, let me show you. Let me go to replay. So right here, as you can see, on Monday, we wicked below Friday's previous day high and closed below, right? So our target is right here. On Tuesday, place, oh my God. On Tuesday, we don't do anything. So we close above previous day high, but like this was still the draw. You get me? How that's still the draw? Like it's still the draw because we never hit that draw. Like we wicked above, closed below. This is the draw. We didn't hit the draw. So on Wednesday, we have to hit the draw. On Wednesday, we wick below and close above. Okay? So we wick below that swing low and close above, indicating that on Thursday, this is our draw. Previous day high. And on Thursday, we rip through. And then Friday, on Thursday, we wick below, close above. Okay, so on Thursday, as you can see right here, we wick above and close below, indicating that this is the draw. Then on Friday, we wick below, obviously, close above because of NFP. And now on Monday, this is the draw. You know what I'm saying? But the reason why I use the weekly PO3 instead of this shit is because it doesn't really tell you that much, and it's not that accurate. Like, according to this daily bias, right, we're supposed to be bullish on Monday. But look what we just pulled into on the daily time frame. Just pulled in and respected the CE of this daily fair value gap. So, like, I don't fuck with that bias, daily bias. Is it okay to use not daily bias? I like to use 4-hour big C. Yeah, 4 hours is how I find my bias as well. On the weekly PO3, is there a specific time frame? Yeah, we wait until after 10. There's not a specific time, but like ideally, if it's like an A+ setup, it happens before 11. I already spoke on breakers. I'm going to post this to YouTube. Don't worry. You can watch it there. Let's go, Gunther. Okay. Can you now tell me how do I know what I should be looking for? Kaiser? I'm honestly bearish going into this next week. We also, so the first thing is, so here's why I'm bearish going into next week, right? So like on the monthly time frame, as you can see, we just put in this bearish fair value gap, right? April just closed. We're trading into this bearish fair value gap, right? How does a bearish candle form? Open, high, low, close, right? What are we doing? Okay, it's May 2nd, and we're open highing, right? We're making a high, okay? So I'm bearish here, and then also we also have this weekly CE, right, that we're respecting, okay? And then on the daily time frame, we have this bearish fair value gap, right here that we have respected. All right, and then on the 4-hour time frame, what do we have? We have this unmitigated 4-hour bearish fair value gap, and then we have this 4-hour fair value gap, right? So lots of bearish PD arrays that are aligning right now. Why would I be bullish? Yo, Kaiser, the only thing that will help you tell is like learning and implementing, bro. I don't know what to tell you. No, Will, it didn't. Can you do a video that goes more in depth about the weekly PO3? Yes, I have one on my channel. It's just you flip buy now trades. No, Will, I haven't. Have not. I know y'all give this man a massive headache. Watch the videos. I have never gotten a fucking bloody payout. The reason why is because of myself, like what I tell you. Like what I tell you about the psychology stuff, like Keyflow has made that extremely clear to me. My own fault. It comes from my lack of experience. Like I've only been trading for 7 months, you know? Yeah, I am secretly British. Yo, bro, Will, go fucking do your research, dude. Stop asking me these dumbass questions, bro. I'm gonna ban you. Um, how much do you risk on 150Ks? 0.5% if you're trading funded. So, what is that? Like 750? That's a lot though. I don't know. Like some people risk 0.25%. Personally, when I was trading a 150K, I would risk like 5 to 600. It was funded. Appreciate you, Jam. If the AM session has like bad PA or like nothing is happening or there are no PD arrays, I'll typically just close the charts. April was horrible for me. Why are you gonna reset your funded? Yeah, now from now on, I'm only like I'm gonna. So February and March were like good months for me trading. So I'm only gonna be moving my stop to break even. After like either TP1 hits or like my first TP hits. I like unless like there are absolutely no PD arrays and just shooting upwards. 2R. Oh, you blow it? Oh yeah, reset the eval if you blew your funding. Of course, brother. Usually, it depends on the trade. Honestly, it really depends on the trade. Yeah, Franco, what are you saying, bro? Guys, I'm probably gonna hop off. honestly. Yeah, man. I mean, Calvin, bro. That's amazing. You deserve OG roll. I'm giving it to you. OG. Got you guys. Yeah, I'm gonna hop on. I'm gonna hop off now. So I hope you all learned. I like doing these. So I'm gonna be live trading next week. I'm actually a fucking idiot, and I forgot that I'm gonna be out of town Monday and Tuesday. So I'm gonna be live trading Wednesday through Friday, not Monday through Friday. Um, but that's chill. So yeah, hope you guys have a great weekend. Have a great rest of your day. Everybody who recorded this, thank you. Go ahead and DM it to me on Discord. Peace out, guys.